Cultivate Smart podcast, a platform for innovation, transformation, and disruption of our global marketplace. This is a cross-border show as my co-host Sashien is based in Ottawa, Canada, and myself here in New York City in the United States. Today we're calling this show Cashing Blank Checks. But before we get into that, Sashien, what's going on up north?
Carl, things are well, and I hope the same for you. It seems like we're moving along here with all this COVID-19 action. Vaccines are out, approvals are going on here in Canada. Looks like the same for the UK and surrounding areas. And nonetheless, I think it's been a pretty interesting year with the way that the market's kind of turned, and a lot of stuff happening in tech and SPACs and all that kind of good stuff. What do you think?
Yeah, I concur with that, and the same thing here in the U.S. though. Locally here in New York, already 50,000 people here in the city have been vaccinated with the Pfizer and Moderna releases here of the vaccine. And I tell you what though, going ahead into January, they're expecting more of the population to be vaccinated. And as we ramp up into June and July, this is very encouraging for getting the economies open, and more importantly, keeping people healthy, keeping people safe. So it's very encouraging. And the same thing is going on in Canada and the UK, as you noted. You did touch on SPACs, and let's transition into that. 2020 saw a burst of activity like few have ever seen before. Even as the pandemic crisis raged, amid the turbulence, 4 letters can summarize the economic landscape this year. And those letters are SPAC, short for Special Purpose Acquisition Companies. These publicly traded shells are created mainly to merge with a privately held business, giving the takeover target a ready-made listing without having to offer an initial public offering. Before looking at a continued 2021 surge, let's look back at the top SPACs from 2020. All right, so here we go. As of December 17th, we're dating the show a bit, Sashien. As of December 17th this year, 2020, 242 SPACs have been introduced. Which ones stand out the most to you? I'm putting you on the clock here.
Carl, it's interesting. I think we've seen over $70 billion of value going into SPACs this past year in 2020. I've got my eyes on many different SPACs, and there's a lot of tools actually. It's kind of interesting that are tracking all of the announcements, the alerts, the filings, all that good stuff. But, I've been closely following Social Capital, head of Sophia, led by Chamath, and, he's done an incredible job, as many of us have seen. IPOA, for example, was Virgin Galactic. That ended up being a pretty good SPAC from where it started a couple of years ago till now. And, IPOB, for example, just recently closed with the merger vote. And that's known as OpenDoor, which is a disruptive real estate platform for buying and selling. And it was actually recently invested in by Kathy Woods from ARC investments. So, there's a lot of good traction from him and his team. He's assembling what I see from the filings, an impressive tech team. So folks from Facebook, for example, folks from Twitter, and folks from Nextdoor as well. There's an impressive board of directors team that he's putting together for each of these SPACs. And right now they're targeting companies for IPO D, E, and F. All of which I think will be amazing, SPACs and performers and target companies that they will achieve. My money in my head's kind of in IPOF right now, which is, if you look at the filings, you'll notice that IPOF is his largest SPAC. So it's a $1 billion SPAC. It would be probably his largest to date. And it's really targeting a tech-oriented business. So, it's going to be interesting. I suspect the announcement will be in the coming months here, maybe in just before Q2 for all these 3 SPACs, and I think really IPOF might be his biggest target.
It's been quite a big year for Chamath this year. I was calling him, he is the MVP of SPACs if 2020 had an award for that. So here's the thing. Going back to Social Capital, all right, real estate this year is up 14%.
Hmm.
All right, this is the highest that it's been probably in the last 10 to 14 years. Where do you see the sector going in 2021?
You know, I think in general, I mean, tech continues to overcome a lot of these challenges that we're seeing, obviously, as a result of COVID-19 and the after effects of all that. I think, real estate's bound to be disrupted, and I think companies like OpenDoor, which he's invested in, and many institutional investors as well, have backed this company. I think we're going to see a very major shift in the way that people transact. They buy and sell, for example. Take OpenDoor. There's companies like Zillow out there that are trading multiples higher than a company like OpenDoor that's only about $30 a share today, which started at about $10 when the SPAC was released. Companies like that, I believe, are going to fundamentally disrupt the real estate game, the industry that they're in, just based on the fact that, we're becoming, again, as always, more technology centric. We're really focusing in on, tools and technology that can better our experience and be able to do things cheaper, better, faster, essentially. You could take, for example, the same way that Slack, Zoom, all these businesses have fundamentally disrupted the industries that they are in, and respectively, they've performed very well as a stock, as a public equity and company. So, it's going to be interesting, Carl. I think, real estate's going to be interesting in the fact that, they're going to have to take, some really interesting data points and take some of their key resources to really help build the infrastructure to take that to the next level. Commercial real estate's obviously taken a hit, many folks working at home, and that looks to be the trend for 2021 and onwards. So it's hard to say when that sort of culture, that environment will come about again the same way as it used to be. But I think technology ultimately will continue to move in quite the direction. And that leads to me to believe even that SPACs are going to be another vehicle to allow, folks that are sponsoring and backing and leading these businesses to really get to these core technology-centric companies that could really propel forward and really disrupted the industries that they are in.
Yeah, and I will say this about OpenDoor. So on the commercial side, like you were saying, there will be some struggles in 2021. It'll continue with what we're seeing right now. The thing I like about OpenDoor is within a few days of requesting an offer, you could actually have a payment on top of your offer in terms of cash within days. Is that because I'm not too familiar with the app, but from what I understand, you could get a cash offer pretty quickly.
Yeah, the platform's designed so that you can, essentially do the buying and selling through this application. You can get offers in very quickly, and you can basically complete the transaction in a short amount of time. So, again, in the case of COVID-19, and when you think about it, in the United States, when they're really targeting, homes and real estate in that area, I think it's becoming this trend where people are really apt to buy real estate via their phone or online. It's kind of crazy, and I don't think it's going to completely change, Carl. But I think that there's becoming this sort of shift where consumers are literally looking at things online and they're buying, no problem. The same way in Toronto, there's been a big downturn, obviously there, but Ottawa specifically is continuing to move very, very quickly in the real estate space on the residential side. And we saw that there was a lot of folks that were buying just literally from listings. They weren't even visiting homes early in the spring, right after COVID hit, and even in the summer. It was virtually impossible to actually go into the homes. But yet there was still a demand in the surge that came about as a result of the technology that they had available. Realtors were able to, do showings via phone, via the computer, and they were able to put together systems that would be able to allow you to see the homes inside and out and be able to get an idea of how it would look and kind of feel. Now, I don't think that's maybe the best solution, in terms of, trying to buy a pretty important asset that you're going to spend most of your time in. But I do think there's opportunities for OpenDoor, and, similarly, the Zillows of the world that have done pretty well in the technology real estate space as well.
Before we move on from Open Door, let's shed some light to the listeners here on, you touched on the struggles of Toronto, and New York City is obviously going through the same thing here locally in the US. Why is it that in Ottawa the same challenges on the residential real estate side haven't been present? It seems like home sales, from what you're saying, are moving quite nicely. Is there what is sparking this? What is keeping that moving?
Yeah, I think it's a long time coming, Carl. I've had this discussion with many realtors that I know in my close circle, many professional contacts that I know. We had this discussion back in March and April when COVID hit, and it was interesting because my mindset and my thinking was that COVID wouldn't really affect real estate because we were already picking up before that time, and sales in Ottawa were starting to really surge. We've seen over 20%, last few years, year after year, in terms of growth. And it just seems that that demand is still there because Ottawa, I think, fundamentally has always been that smaller sort of capital city here in Canada. But at the end of the day, it's never really gone to that same sort of level as Toronto, Vancouver, and all the other major metropolitan sort of cities and hubs here in Canada in terms of growth in real estate. So I think it's just a long time coming. I think that this was bound to happen. I think been a major demand and that surge as a result of folks that have been trying to get into the market. And now that kind of becomes what you almost could think is a bubble, Carl, because when things like that happen, similarly in SPACs and other fundamental sort of shifts in the market, there becomes a sort of surge. And when that surge hits, as they say in the stock world, FOMO kind of hits. So fear of missing out. People start to want to buy and get in. They realize that the prices are going up, and so that forces them to want to buy and try to get in. And that continues to be the trend here in Ottawa. And I'm not sure what's going to happen in 2022. My bet is that it's going to continue to still grow very well in 2021 rather, and in 2022, maybe it might sort of level off. But it's really hard to say at this point. I think just based on the interest rates alone, we're seeing obviously in the sub sort of 1% range for the cost of borrowing here. And it's continued to drop. Pre-COVID, it was actually about 2.5, 2.7 even. So, obviously a major drop in real estate mortgage rates has obviously caused that demand to rise as well. Cheaper cost of borrowing, similar to the States. I think with the feds, saying that things will basically drop to zero, that just means that there's going to be obviously a lot of folks that are probably refinancing consumer debt as we've seen it in the past, 8 to 10 months, and a lot more buying as a result of the folks that have the money in their pockets and they're ready to basically make those moves.
And as long as rates stay low and continue trending downward, activity will continue to move in the real estate sector. Let's transition here. Let's transition because I had a couple of SPAC picks of 2020. I want to know what your thoughts on these. All right, my first pick is MP Materials. Okay, so MP Materials, for the listeners, owns and operates Mountain Pass, the only integrated rare earth mining and processing site in North America. This is North America, Mexico, Canada, the U.S. though. So it's the only rare earth processing site here of that scale, I should say, here in North America. Mm-hmm. That's my first pick. My second pick of the year, which is very fascinating, especially with a lot of sports lovers here, and it probably had a little impact during the shutdowns of the sports scene in the summer and the early springtime here. DraftKings combined with Diamond Eagle back in April on a $3.3 billion merger. The digital sports and entertainment company was created to fuel the competitive spirit of sports fans with products that range across daily fantasy, regulated gaming, and digital media. Sashien, what are your thoughts on DraftKings? I know I'm putting you on the spot here.
It's interesting, Carl, because I think you and I were having some discussions probably about 6 months or so ago, just about the esports kind of world. Probably about 6, maybe even closer to 12 months ago, we were talking a lot about esports. I had some some investments in that sort of space, esports entertainment group being sort of the larger one, they have actually grown very well. They've gone from just a few dollars on the stock to now I think $7 or $8 just recently. Acquiring companies in that space, and I think the name of the game in that industry, no pun intended, I think there needs to be a lot of traction, obviously, on online gamers and folks that are going to spend the time to gamble and play sports and bet on sports online. And I think there's obviously that sort of demographic and that sort of reach available right now with folks, for the most part, working from home. DraftKings is one that I was deeply looking at the time of when I was making those sort of moves. And I thought to myself that that was a company that's probably going to do extremely well. Just again, I think they become sort of that category leader. They started off like every other SPAC at, I believe, about $10, and now they've gone to about $50 or $52 today. They perform very well, I would say, being sort of in that sports kind of gaming sort of world. And, they're interesting in that they have basically created or paved the way, I think, for other sports companies in that space and being a sports sort of SPAC. So I definitely would agree with you. I think that's a great pick. MP, known as FAC Fortress Group, we also chatted about that, I think, several months ago as well.
We did.
Rare Earth, in my opinion, when I saw Chamath lead the PIPE deal, the private investment and public equity deal, I believe it was around $200 million he led into that. And, it was a no-brainer. When I read the investment thesis for that, to me, it seemed like a no-brainer. You have companies like Tesla that are obviously playing that sort of renewable energy space sort of play. And you have a lot of businesses now, EV, obviously now with the rapid growth of tech and SPACs focusing on electric vehicles. So when you think about China, obviously being one of the larger sort of players and suppliers, it makes total sense to have an opportunity to build one of the largest, suppliers in North America specifically. So in the case of MP, I think that they're creating almost a monopoly in the Western Hemisphere, and they will control the majority of the supply as it stands. So, the stock has obviously performed very well. It started off like the others at $10 or so, and now it's in this sort of mid 30 range. And this is all within about 6 months or less, which is incredible. So I think it just speaks volumes to, the management team, folks like Chamath and Social Capital that are involved in these deals. But really good founders, really good technology, obviously picked by some really good folks that have been investing, obviously, with impressive track records over the years.
Right, and we had spoke about MP Materials as you touched on earlier this year, and that's what I found the most fascinating about it is they have this entire market here in North America, and like you're saying, it almost serves as a monopoly. It essentially operates as a monopoly. Huge opportunity ahead for MP Materials, which I find very fascinating. Mm-hmm. Going back to DraftKings, I'm telling you, Sashien, gaming is huge, and I've always known gaming was huge, but once we went into the shutdowns globally and just reading articles and talking to people, I didn't realize how big gaming was. Gaming is extremely popular, not just among teens and young Americans and Canadians alike, but even into adults and older generations. Gaming is a huge it's there's so much opportunity out there. I'm like stumbling over my words thinking about gaming, though. What I've learned about gaming in the last 7 months, it's fascinating. Also, as far as fantasy sports is also huge. Yeah. I've participated in fantasy for years, and it's basically something that is only NFL football here for those listening in the United States, but it's very time consuming, but it makes you feel like you're part of the league, whatever league that is. Do you participate in any fantasy sports, Sashien?
I don't actually. I've always been big into sports, basketball, football, soccer. I try to watch as actively as I can, I guess, online and whenever there's something on. I think COVID's obviously taken a bit of a turn for sports in general, but it's interesting. I think sports betting is a big deal. Obviously, here in Canada, ProLine is a big thing. when it comes to sports betting. But I think when it comes to online, this is where the action is. You're completely right. There is a lot of folks, playing that game online and fantasy sports as well the same way. So I just think, again, places where we can basically have folks actively playing these things, actively involved, really spending their extra time each and every day outside of work on these types of platforms. I think that leads to a lot of growth and mass adoption, and just a lot of great things for the companies, obviously, that they're continuing to build. So DraftKings is, I think, amazing. Esports Entertainment Group, also amazing. I think we're going to see some more gaming. I've also been hearing some talks about some from the UK, some SPACs that are actually coming out in that space. So it'll be interesting to see what comes about.
It is, and there's also on other platforms such as YouTube and other social platforms, you're seeing a lot of gaming channels on there, which is something that kind of started about, I don't want to put a time frame on it, but let's say the last 8 to 10 years, you start to see the growth in that. And the gaming channel industry is huge. You have a lot of content creators getting tons of views, basically gaming and having, I find it fascinating. It's something I want to dig more into because it's definitely something, I used to be a gamer back in the days, kind of gave it up, and to see the growth that this industry has seen over the last few years, it's very fascinating. Sashien, I want to move on to losers of 2020 in the SPAC in the SPAC sector. Do you have any losers?
I mean, there's probably a good few, Carl, that have come about in the last 6 to 12 months. Probably the biggest one for me would be Nikola. I think there was a lot of promising, news and opportunity and things like that came about, earlier this year. And, I've seen the stock for Nikola. Obviously, when they started out, they were just like every other SPAC at about $10. And then they tipped off at about, 60, $70 sort of in the June sort of range this year. And it's interesting, obviously, with the founder having a lot of issues there, some fraud, obviously. There was a lot of key components in that business that weren't obviously built correctly. And, for the most part, it's hard to say if they really just tried to raise money to kind of get the business out or, try to get liquidity. But ultimately, it's obviously not performed very well. It's gone from that 60 to 70 sort of range in June all the way down to about 13.75 right now. So Nikola is, I think, in my opinion, one of the biggest losers, especially in terms of SPACs this past year. I also think that Hylian Corp, HYLN, is another one that hasn't obviously done very well. It's in the same sort of way. It started at about $10 for the SPAC, and then it went up to probably about $40 or $50 or so, and it's come back down now to about 17. So, at the end of the day, I think there has to be, a really good management team, a really good sponsor that gets involved with these stocks. Some of them are obviously really hot. EV was a big deal for 2020 in terms of SPACs as well. But I would say that these are the two biggest losers, in my opinion, just in terms of where they took off and where they kind of, ended off at the end of it all. But it's also interesting, too, when I speak about these two companies, because when I think about QuantumScape, which is QS as the ticker, that started off the same way at $10. And it kind of had an interesting pattern where it was moving to the 20s, the 30s, came back down again. And eventually it hit over 80 and now over $100. So it had a riveting sort of pattern to it. And it ended up becoming from a $10 SPAC under 12 months ago to now over $110, which is very interesting because I think a lot of investors sold off early. They didn't expect for it to go this high. But QuantumScape, I think, has also performed one of the best, but it also threw off a lot of investors as well, just given that the fact that, a lot of investors tend to get into a SPAC and then on the announcement, they tend to sell off and take their profit, which is quite meaningful, or they wait until their merger vote. And once that's sort of completed and they go through that merger process, a lot of investors will sell off just prior to that. So if you were an investor in QuantumScape and the ticker QS, likely probably would have sold in that 20 or 30 sort of range before it really took off. But it's just interesting to see how far that's gone, Carl.
Where do you see QuantumScape in 2021?
It's going to be interesting. I think, with them, they have obviously a pretty large market cap at this point. They're known to be the second most valuable car stock in America at this point. So I think they have a lot more growth ahead. It's hard to say if there will be some sort of pullback or correction here along the way. But I do think that they have obviously a lot of backing. They've been featured on Barron's. CNBC has also profiled them. Many of the large, prominent sort of networks have been sort of supporting them. So I think when you have that kind of backing, you have good analysts on Wall Street that are also backing as well and talking very positively about the business. I think there's probably a lot more growth ahead. It's tough to say, but there are obviously a lot of players in the EV space as well.
And QuantumScape is the second, as of today, the second most valuable car stock in the United States. That is very fascinating right there.
Mm-hmm.
For myself, losers. I don't know if I'm going to call this one a loser, but I'll probably call it a disappointment of 2020. I'm going to go with Virgin Galactic Acquisition Corp. So this one actually hit its IPO late in 2019. So technically it isn't one of the 2020 SPACs, but a lot of movement this year. So I'm going to throw that in. I'm going to call them a disappointment mainly because of their botched test flight that we all know about. And that really, I mean, the stock is performing well, but that really kind of set them back. Add to that, there's a lot of competition now moving into 2021 in terms of Blue Origin and SpaceX. What are your thoughts on Virgin Galactic?
Virgin Galactic, I think, has been one of those iconic businesses that Richard Branson, obviously is backed. And I think he's obviously really in love with that business and everything that has to do with airlines. He's an incredible entrepreneur, incredible founder. And I think he's proven to be one of those leading investors as well and company builders over many, many years, of course. So, take, for example, Virgin Galactic. I think when they started off a couple of years ago, there was a lot of press. There was a lot of traction, with the stock. It started off at $10 again, like the other SPACs, but, took a bit of a nosedive at one point to 7 and came right back up again. And ever since, it's kind of treaded through the 10s, the 20s, even over the 30s. But then, when we take a step back and we look at what recently happened with the test flight failure, which I do think that obviously there will be some time that has to be spent to kind of rebuild that. We're not really sure, from what I understand, when that will be, the new test flight. And it could take some time. Just seeing, some of the insiders sell the shares might be sort of something to raise the eyebrows on in terms of, their level of commitment, where they see the business for now and the foreseeable future. But I do think that there is a lot of opportunity for Virgin, just given the fact that they're obviously targeting very high net worth individuals. They're about $250,000 per ticket. So when it becomes a very profitable business, which it should once it's up and running within 2 or 3 years, they expect it to be fairly profitable. It's really hard to say at this point. I think COVID obviously took them back a little bit as well. And they have tremendous growth plans in place. It really just comes down to getting, these first steps out of the way and knocking it out of the park. And I think they can basically get some runway from there. So it's going to be interesting, Carl, to see where that business lands. I have a lot of faith in Richard Branson, Chamath, and the others that are involved. I think that they have a great management team. They have a really good team of engineers, from what I understand as well. And I think they're at the point where they're just basically trying to get through this testing process so that they can knock that business out of the park. So I do think there's a lot of value there. I do think that it will be an interesting business. VG Acquisition Corp, Richard Branson's obviously his SPAC there as well. It seems to be performing very well, just given the fact that it started off at $10 not long ago and it's now at about 12. It's tough to say what they're going to be targeting. I've heard talks about, Hyperloop and other things around that, different sort of businesses that are around that sort of aviation maybe space, or even just travel in general. It could be very interesting, Carl.
It is, and I tell you what, there's a lot of positives here, like you touched on. First of all, like you're saying, the leadership, having Richard Branson, just with him as the leader of this, I mean, I have full faith behind him. Also, it's a $20 billion market. So if they could actually beat Blue Origin and SpaceX to the punch, they're in great shape. I mean, I see nothing but upside for them. But I had to call them a disappointment. I had to put that in there, but I was careful not to call them a loser. Sashi, let's look ahead. Let's look ahead to 2021 and beyond. What does the future hold for the economy, and more specifically, what does the future, which is about 5 days away, the future, because 2021 is right around the corner, dating the show
Mm-hmm.
again. What does it hold for SPACs?
SPACs are in what we think is sort of like a bubble, right? There's a lot of SPACs right now. As I mentioned, over $70 billion of capital has gone into SPACs in 2020. I think this trend is going to continue to, continue to really move forward, Carl, for 2021. I think we're off to a really good start. There's a lot of traction, obviously, in that space. We're seeing a lot of players in the UK, Europe that are launching SPACs as well. And as you mentioned, a lot of celebrities are now getting involved. So you're getting really interesting names that are backing these SPACs to really draw in, I think, retail investors into that sort of acquisition company and blank check organization. And it leads me to believe that we're obviously in this sort of bubble where there's going to be a lot of positive action, a lot of positive gains and returns for investors, but we have to pick and choose them carefully. I think when it comes down to a SPAC, there's a few different things that come about in the decision making and the due diligence. I think number one, you have to have a really good sponsor. So an individual and a team that can really get a good target, because at the end of the day, they are rewarded on their work to find a really good target and do the due diligence and all that good stuff. And I think when you think about Social Capital, Hito Sophia, and maybe Bill Ackman, who's obviously been in that space for a long time as well, they have a really good team of investors, and they have a jockey, almost you could say, someone who could really control the way that the deal flow works, and has an ability to network and talk to individuals effectively to get these transactions to work. That's all part of the process of determining a SPAC. When you raise that money, you have to be able to find a target within that sort of threshold of the capital that you have available, and it has to align very well. So I think that's probably one of the biggest things they need to do at the start. And then number two is really just the investment experience, right? They need to be a savvy investor, as I mentioned. They need to know how to be that sponsor, talking to investors, talking to institutional investors. There's road shows, of course, that are involved in this process where they're meeting with those institutional investors, the hedge funds, the pensioners, anyone that really wants to get involved. They're trying to get the buy-in. So you have to have that, really good investing acumen and knowledge to put together these term sheets to really attract those investors and get the buy-in. But at the end of the day, it's retail. And in this situation, this sort of model, retail is one of the biggest buy-ins that you need as a SPAC sponsor and a backer, because at the end of the day, once it goes public, retail for the most part is the ones that are going to be spending and investing that money into these companies. So, when we think about this bubble and we think about all the businesses that are emerging at this point, there's so many SPACs, Carl. I mean, that's why I have these tools in place to kind of keep up with them all, because we're hearing new ones every single day. And so, the third thing that you need to do, even as a sponsor, and figuring out if this company, this acquisition company, this blank check company, and founder and management team is really good, is really understanding if they can promote this thing very well. You have to have good deals, of course, and you have to be able to do the due diligence, but you have to be a really good promoter, Carl, as well. And I think Social Capital, Hito Sophia, they've done a really good job, obviously, being on CNBC and other major networks to promote, and they have a really strong following. And the same way, too, with some of these celebrity investors. I've seen Foley. We're seeing Shaquille O'Neal now being involved. Bill Ackman's obviously done really well. A lot of these folks have really strong networks that can help to propel these deals forward. But you have to have some of these core, steps and process to be able to effectively invest in these SPACs and back these SPACs. And these are just the few things I think that come to mind when I'm evaluating if a SPAC is effective or not, and if it's a deal that I believe that will come about very strongly for myself and other investors. It's really trying to bet on that management team and the sponsor.
For some of our listeners who might not be too familiar with SPACs or probably haven't even heard of SPACs until this episode, do you think for people who are not too familiar with what they are, what they're about, what their purpose is, do you think it's a good place for them to park their money short term?
Yeah, I think, the way I look at it is that there's two ways to play a SPAC. There are common shares like any other business that's publicly traded. And then there's warrants. And warrants, is another sort of game in and of its own. It's, the ability to say if you get into a SPAC at $10, which is essentially the floor, Carl, you can get in between that range of 10 to let's say even $11 before a SPAC really starts to take off. And to me, that allows you to be at sort of that 5 to 10% downside risk level, which I guess for me, it's really no big deal, no big risk to me, because I feel like, the way that a lot of these SPACs perform and the high quality sponsors behind them that I back, there's, ultimately 100, 200, 300% or more upside potentially in each one of those deals. So timing, as you know, is everything. And so if you can position yourself between that $10 or $11 range on the common stock, you're in a really golden spot. The same way you could think about warrants as well. Warrants allow you to be sort of in an opportunity to kind of hedge. I've played warrants strongly in the past year, and I'm a big proponent of them just in that you can basically get in warrants at a very cheap cost. Some of them are $1, sometimes $2, roughly $2 to $3 most of the time now. I've seen folks get involved at those very early stages, at those very low levels. And once the stock is essentially over $20, warrants can be effectively over $9 or $10 easily, if not in the mid sort of teens once they get crossing through the $25 to $30 range. So as you can imagine, there's so much upside involved when that happens. Very little risk as well. The only major risk I would say is that with warrants, if there is no deal that is announced by that company, which is typically the rules are within 2 years of the filing date when they start to raise the capital publicly, they have to be able to find that target. And so if they can't, investors, again, the beauty for common share investors is that they get $10 back of their money. So it's very, very much so de-risks for investors that buy in that $10, $11 ranges, which is why I'm a big fan of sort of getting in at the right time, of course. The same way with warrants, though. The major difference, though, is that there is a risk involved when you're buying warrants, because if that deal does not come through within that 2-year period, which I haven't really seen very many deals not go through, to be honest. And if you're dealing with a high quality sponsor and a backer, they come about with these deals within 6 months of filing on average. So to me, it comes with a bit of risk, but I think there's a lot more reward involved as well. So these are the little things you have to kind of think about, Carl, when you're investing in SPACs and looking at the team that is essentially backing it. But, at the end of the day, I think it's becoming a very good model for retail investors to take less risk and participate on the upside.
To the listeners, I hope you're taking notes here, though. Sashien is giving you a step-by-step playbook on SPACs, what you should consider and what you should be looking out for. This is especially key now moving into 2021. Sashien touched on timing, and the timing couldn't be better because as we go through this pandemic, we're going to continue to see SPACs though, but I think right now the activity is at a high now. I think the surge will continue now moving into the early parts of 2021. We'll see what happens beyond that, but you've got a lot of value here from Sashien. I think we should leave it here. My forehead is sweating right now with all this data. I'm telling you, it's going to be very interesting to see what the landscape brings in 2021. Will the surge continue? We'll see, but we'll be on top of it. We will be doing another episode after the new year, dating the show again. It's the third time I'm saying that. We will be doing another show to start off the year, and we're going to dig in deep. Sashien, is there anything you'd like to say before we take off?
I think we're in for a real run, Carl. I think there's going to be a lot of action in the SPAC world, lots of plays in EV, lots of action from Wall Street. I'm just getting news feeds right now on SoftBank, Masa, all the biggest names in the business are now coming about to put together these blank check companies. So I'm personally really excited for what's about to come. I think we've seen a lot of action in 2020, especially in the last half of the year. But I'm really excited to see what happens in Q1 and onwards. There's going to be a lot of deals. There's going to be a lot of action, and there's going to be a lot of money being made, especially for retail. So ultimately, I think there's going to be a major shift in that capital power and strength, especially for retail investors. And there's going to be a lot to gain off of this. So it's going to be interesting, and I'm looking forward to catching up in the next few weeks.
Absolutely. You've been listening to Cultivate Smart, a platform for innovation, transformation, and disruption of our global marketplace. Sashien, next time we will tackle some more SPAC. Thank you for listening. We'll catch you guys next time.
Thanks.